I'm Charlotte McLeod with the Investing News Network, and here today with me is Louis James, editor of the International Speculator. Thank you for joining me today.
Thank you, Charlotte.
Great, so let's get right started. We're here today at the Sprott Natural Resource Symposium. Yesterday you spoke about your new research. Can you give me a brief rundown of the Golden Runway?
Okay. Well, it's kind of interesting because we talk about research, and usually that means we research a company, a stock. Is this a good idea, and so on. But this is like real research. It's a new idea. Actually, it's a very old idea, but it's one that was misunderstood. And the idea is fairly simple. There's a cartoon that exists in the resource investment space where a junior company has nothing, it makes a discovery, and it goes through the roof. That's where the 10-baggers are. And then, assuming you get a discovery, there's a boring engineering phase where you have to do all these studies and hydrology tests and all this stuff, and the stock slumps off. And then it ramps up again towards production where you build an actual mine. And then what happens after that, who knows? Maybe they'd make another discovery, it goes up, or the mine gets mined out and it goes down. This is the standard cartoon. It's what Doug Casey taught me when I was a little boy sitting on his knee. And everybody knows about the 10-baggers in that discovery phase, and that's why we love discovery, we love exploration. But what I realized suddenly last year was that nobody had ever quantified what the ramp up from the boring engineering phase to production was. It's assumed that's so visible. You put out a press release, we're building a mine. Everybody can see that, so it must be priced in. That increase can't be that great because everybody knows about it. Turns out that's not true. Nobody had ever looked at that number before. I asked my team to go and put together, a track record on this. And the first batch of results were so amazing to me that I couldn't believe it. I sent them back and said, no, that can't be right. Go do it again. They doubled the sample size and came back with roughly the same data. We have now doubled the sample size again. We have 105 cases of people that went through that cartoon life of a junior that had nothing, making a discovery, and building their first mine. Out of the 105 cases, 95 succeeded in building their mine. And including takeovers, there were 4 more. So it's a very high probability of success at building the mine. And if you do that, the gains are enormous. They're on the order of a double for the entire sample set. If you do it in a bull market, it's even better. It's on the order of 160-odd%. If you do it in a bear market, it still works. The average of all, we found 31 cases of bear market first-time mine builders, and their average return was 24%, much more modest. But this isn't a bear market, so it still works. And the top 5, this is the number that really blew my hat off. The top 5 first-time mine builders averaged 764% gains. That's on the order of a discovery, not quite a 10-bagger. But you know what? 7 or 8 times my money, that's not bad. Especially if my odds are not, 1 in 1,000 or 1 in who knows what of making a discovery, but 95% that I'll succeed in building my mine, or or even if my odds are 5% that it'll be in one of the top 5 for a 7 or 8 bagger, those are great odds, much better than exploration. So I'm really excited about this. This is original research, and I've asked all my seniors, Doug Casey, Bill Bonner, Rick Rule here at the conference. Nobody has seen this research done before. So if anybody's seen it, send it to me. I'd be happy to compare notes. But just everybody assumed that the ramp up to production, it can't be that much because it's visible. It's baked in the cake already. And the reality is you can make a lot of money in this with a much lower risk than you can in exploration.
Okay. I don't know if you can tell me exactly which companies are in this position right now, but can you give us an idea of how many there are in this position that investors could be looking for?
Well, if anybody thinks about it, how many companies can you name right now off the top of your head that are building their first mine? Most people will be lucky if they name 1 or 2. So it is a small space. It's not something you can, bulk out a portfolio on, but that's okay. There are usually, I think, about a half a dozen per year that are building their mine. And a recent case of somebody doing this would be Pretium Resources. They just announced their first pour, and their gain from the construction decision to first pour was about 85%. So a little bit lower than the average. The stock has had to fight with bear market conditions and all kinds of things, ups and downs, but it still worked. It still confirms the thesis. Not quite a double, but pretty close.
Okay, and just to clarify, this is not just gold companies, it works for others as well.
Yes. Now, Yes, that is correct. But let me say, usually if you have a copper project, it's a much bigger project. Very few juniors build a copper mine because if it's a copper mine worth building, it usually gets taken over by a major, and they end up doing that. But we do have a few examples in the database of first-time copper builders, and actually the results were even better than for gold. I don't put too much weight on that because it was such a small sample size. It was less than 10. We had 15 silver cases, and they did better in some ways than gold, worse in other ways, but all the numbers were similar. And we don't have enough data for uranium or others, but we're working on this. For now, most of the data is in gold, but the same pattern holds true in copper and silver, and I expect, therefore, that it will be across the board for all metals.
Okay. I'm going to switch gears a little bit. I wanted to ask you about gold and gold price in the second half of 2017. Where is it going, and what factors should we be looking at?
Well, let me get my crystal ball out of my briefcase here. Crystal ball, what do I see? But no, more serious answer is, even though gold bugs like me, I'm not really a gold bug, but kind of, sort of, we like to believe that gold and silver are different, that precious metals are not like pork bellies or coffee or something like that. They're special, they're monetary metals, and that is true. But they're also commodities. And even though there are times of great, uncertainty in the world where gold and silver take off on that safe haven evaluation, about 85% of the time they trade with commodities, and the correlation is very, very high. It's on the order of 90%. It's an extremely high correlation, and therefore, actually, I'm bullish because, as we've seen, the commodities as a group have turned up again. Copper's up, even uranium is up. The whole commodity sort of super cycle appears to have put in a good bottom. And we've seen gold is up too. And that fits the pattern. That makes me bullish.
At the beginning of the year, a lot of people were interested and excited about Trump's impact on gold. I'm not so interested in that right now, but I do want to know your thoughts on his impact on the overall mining sector, because people were also thinking, maybe he'll make it easier for companies. Has that actually happened?
Well, I do think the initial excitement was premature. I mean, the uranium price boom at the beginning of the year was not based on fundamentals at all. It was still an oversupply. It was all about Trump, and that fizzled, and no surprise. It is coming back now, creeping back, and that's more solid. That's interesting to me. But to answer your question, it's not all boom and bluster. There is some reality there underneath. And Trump's EPA is visibly different from Obama's EPA, and that EPA has, for example, come to the table as a more honest and fair player with Northern Dynasty, as an example. That they still don't have their permit. It's not a guarantee that that project will go forward, but at least they're not facing a hostile agency that seems to have it in for them anymore. This is a very positive change. When we see Trump's positive remarks about domestic energy, we see the Keystone thing. There are a lot of actual decisions, not just campaign promises, that are visibly pro-resource sector. And even though I'm not a protectionist in economics, America First, you can argue pros and cons of that, but it is good for natural resources, at least in North America.
Okay. Last question. I'm curious to know if there are any other metals you are interested in right now. I think you mentioned cobalt yesterday, which surprised me because I think at the beginning of the year you were saying it's quite a difficult space. So.
Yes, I think you asked me about this before, and I have always been, I hope not negative, but just very skeptical about what I think of as the oddball metals. Many of them, they don't have an international spot price. There's little transparency in the market. Things are set by contracts, which can be short or long term. It's a complicated market, and they're usually so thin markets that a single new source of supply can crash prices, or a single new source of demand can make prices go up because they're small markets. But my team has done a lot of work on this, and we've concluded that the cobalt space is in structural, it's looking at structural supply deficits for years to come. Unlike lithium, by the way, which is way up in price also, and for many of the same reasons, but it is not in short supply. Lithium is not rare, and it's not in supply deficit, whereas that's where cobalt is going. And Cobalt now has an LME price, so it's a much more visible and transparent market. I like both of these combinations. So yes, I have turned bullish, cautiously bullish, but actually quite bullish on Cobalt.
Okay, very exciting. That's all from me for now. Thank you again for joining me today. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Louis James.